Welcome to After Hours at TradersPost for March 28th, 2025. I'm Tom Hartman, joined by Mike Captain Stock America Christensen to dissect the market's biggest moves. After Hours is your go-to market commentary powered by TradersPost, the ultimate automated trading platform. But we'll tell you about that later. For now, we're diving into three big stories that have moved markets this week. GameStop reverses 15% gain with a 25% drop on Bitcoin Treasury news. Trump's Liberation Day tariffs are liberating the stock market of buyers, and Bitcoin falls just enough to make traders doubt their upside targets. The bell has rung, so let's get into it because as traders, we don't just watch the news, we trade it. Mike, it has been an interesting window of weakness. I'm just going to bring that term back in from Ken Carson that we've been bringing up now for months. He brought in this term that during March OPEX, we're going to have this weakness thing. And if there's a catalyst, things can get pretty crazy. Have your trades this week, have your strategies or anything like that been running? Have you been doing well, or have you stayed out of what's going on?
Nope, doing well. Have a couple of prop firm accounts running on an automated strategy, which just trades above or below VWAP at the open and carries through to the end of the day. And we've had some pretty big short days lately, so things are looking pretty good there. Today was one of them.
Yeah, I've been short Bitcoin, and I'll tell you, for a couple of days this week, I was like annoyed. I was like, "Am I totally wrong with this?" Turns out, no.
Turns out you were right.
Not at all. Yeah. Well,
we had a little bit of a fake out there though, because the SPY did close above the 200-day moving average. I know we talked about that last week, and then proceeded to close below the 200-day moving average again. So the market's definitely a little confused at the moment, but we kind of anticipated that with the chaos around tariffs being on, tariffs being off, tariffs on, off, maybe on, maybe off. I'm not sure. Where are we at with tariffs?
Well, let's start off with GameStop, which is what a story. After our talk last week with MSTR and trying to understand the Strife preferred shares, the preferred stock, GameStop decides it's going to add Bitcoin to its treasury, which caused a 15% rally in the stock.
Right.
Which people hailed as, hey, this is going to be great. Other companies should do the same thing. And then it promptly reversed 25% down, giving up all the entire gains and some of the non-Bitcoin gains for a while. I am really struggling now with this MicroStrategy Bitcoin Treasury ecosystem that's like bleeding out. And it seems almost clear that GameStop decided it wanted to do this. That the board decided it wanted to do this because they needed to like distract from the fact that their sales are just not doing very well.
Yeah.
I just wanted to play before we start here a clip from Fox Business News where an analyst was talking about this GameStop thing. So this is, just keep in mind, this is when it had the 15% rise, right? So before the drop, and I thought it was pretty interesting. 1 second here. All right, let me know if you can hear it.
Hey, Charles, they coming back on. Listen, as to their almost $5 billion they have in cash. Again, no debt, by the way. We think they should put at least half of that amount, at least $2.5 billion, should go into Bitcoin at this point. The problem that Ryan Cohen, excellent CEO, has is that he should have made these moves a year or 2 years ago. When Bitcoin was 30, 40, $50,000.
But that's what if, right? That doesn't matter anymore, right? That's in the past. But for the future, you say this is a good approach, though.
Absolutely. It's a great special situation stock. We played AMC. We did well there. We used Trump Media, did well there. We think GameStop is going to 50 on this move, ultimately $100, because this is now a $13 billion hedge fund that's got the ability to invest in Bitcoin, which is just getting started, is the best supply-demand story there is. We applaud Ryan Cohen on this excellent move.
So another...
Hey, Charles, they coming back on. Listen.
Okay, so that means, so you hear that there.
Did I just hear him refer to GameStop as a hedge fund?
Yes, exactly. Can you believe that? Can you believe you could go on national TV and just from a vertical research, you're not gonna hear from me, and with a straight face say one GameStop should have put 50% of their reserve holdings into one of the most volatile assets in the world.
Yeah.
and then call it a that this should have been done years ago when Bitcoin was 30,000, as if there was a promise that it should go up higher than that. Like 30,000 was just as crazy as it was now at 80,000, and that it's a hedge fund. Look, Mike, this whole thing where the idea that these companies are going to put Bitcoin on their balance sheet was supposed to help support their business practices. Like ostensibly that was the case.
Okay.
Now they're flat out referring to these things as just financial vehicles. Basically, if you'd be stupid if the whole stock market didn't become a derivative of Bitcoin. What on earth am I seeing here? This is crazy. These are grown people.
Yeah, it's hard to analyze the company if they're trying to use another vehicle that we can't really predict cash flows on in order to get a sense of what their future value is. All they're doing is incorporating a speculative asset into the value of their company by purchasing and retaining Bitcoin on their balance sheet. I'm struggling with this. This isn't a very good play for investors to rally around, potential earnings growth in the future. At least for me, I think my struggle is definitely around trying to make sense of GameStop's business model, and I'm not seeing it here. Why the the Bitcoin thing feels like more of a distraction than anything else. And certainly, if you have to reframe the company as a hedge fund, then you're in trouble.
When other people start referring to your own company as a thing that it's not, then I mean, come on. What are they just going to change their name like MicroStrategy? They dropped the micro. Is GameStop just going to call themselves Stop? Just get out of the whole game business altogether.
Sure.
So a couple of points over here that I thought was interesting, and actually I'm about to left turn here and try to I'm going to Quentin Tarantino it and tell you that at the end of this I'm going to make the small case for a bullish GameStop.
Okay.
But not for the reasons that they're talking about. So the idea is that they have $4.775 billion in cash reserves, and like the guy was saying, cash is like, ugh, gross. Who wants $4 billion worth of cash? I'd rather have half of that instead of a high volatile asset. But they're not deciding to just take some of their existing cash stockpile in order to buy it. They decided to issue convertible bonds,
Mm-hmm.
1 point something billion dollars worth of 1.8, 1.5 of convertible bonds, 1.3 at 0% interest. And it's run till what is it, 2030? I can't remember the month, but 2030. Obviously at a higher price than what GameStop trades at now. So the idea is that you're to buy this debt that is at the top of the debt stack. So bankruptcies are going to get paid off first, and but since they have Bitcoin on their balance sheet, for sure when Bitcoin hits 250,000, 400,000, whatever, a million, GameStop is going to be worth that much more, and you'll be able to convert your bonds into the common stock and make a bundle. So very low risk and high reward leverage play on Bitcoin. Okay, I hear this. Why, if that's what you want, why wouldn't you just buy MSTR? Why don't you buy Strife and Strike? Like, if you want to do that whole, I want to buy a company that's leveraged, whatever, to Bitcoin, just buy the MSTR, because they're not saying that this Bitcoin holdings will help make their business better. There is no mention about their core business at all with this. It's just we're going to take this money to buy more Bitcoin.
Right.
So if it's not to make the core business better, well, go to the OG of that, to MSTR, and ride that all the way up. The thing here that I find very interesting is that short interest went up drastically on GameStop, and some people are putting this at let me just pull it up over here, that the volume that you're seeing for the short interest compared with the shares that are outstanding is suggesting that they're naked shorting the stock. That people are naked shorting the stock, which means people are sort of like gassed up a little bit here, at least in the the Reddit threads and the Twitter threads, that we could have a GameStop meme explosion
round two.
Exactly. So the idea here is that it could cause imagine, so the stock is already down, and we can imagine that we have some of the selling pressure because of the stock market as a whole being down right now. So when I was actually taking a look at the options, you know me, I'm always going to go for the for the options on these things, for these crazy plays. And you take a look at GameStop. Actually, let me pull up my screen. I love long shots like this. They're just so fun. So GameStop, let's say by June, and let's say, I'm saying by June because we'll see in the next story that I do think Bitcoin gets to all-time highs by June. So let's say that that's the case, that you're buying this because you think it's Bitcoin's going to run, and let's call it $30 per option contract. Sorry, the $30 strike, so $200 per option contract. I'm in the wrong one here. Long call GME by June 30th, just for quick sake. Then you can get anywhere from 40 to 100% on the trade if Bitcoin really rips from here. Actually, now that I'm looking at it, that's not a very juicy return for these options. Putting out 200 just to get 100% return. That's not crypto level stuff. I might as well just buy Bitcoin.
And that, of course, estimates no change in implied volatility, which with where they're at right now, I would expect there would be a rise in IV, just because the price is still pulling back from here. I would expect that if GME were to continue to pull back, they would head somewhere around $17 a share.
Right. Well, the guy on that Fox Business, he was suggesting $50 a share is what his price target would be because of this whole run up.
Got it.
And if that were the case, you could be in the 7 to 10x territory for the option.
One thing I can say that would support this thesis is that GameStop is currently in an 82% drawdown from peak. Their volatility is so high. If I can share my screen. Let's see, do I already have it shared? Yeah, there we go. Their volatility is so high that I can only really look at it on a logarithmic chart. If I use the linear chart, it's impossible to even understand where the trend is. Yeah. So putting it on the log chart, we're actually at an 82% drawdown from this peak from 2021, which was, of course, the first round of the GME meme craze, if you will. So this drawdown is pretty significant, and there's a fairly obvious support zone somewhere here at about 1750. So I can definitely see that pulling back even further, and it would be interesting to start buying right in and around that zone, unless you're selling puts, of course. But that puts it at almost an 87% drawdown from peak overall. Now, my issue with GameStop overall, though, is that even in its current price, it's still significantly overvalued. Fair value should be somewhere around $7.34. Past performance is shaky at best. What I've noticed is even since 2021, it's just been a volatile mixture of earnings improving and then not improving. These last couple of years have looked a lot more positive. Of course, they're actually back into profitability territory, which is certainly promising. But I think they're relying a lot on recent performance to bolster more than sort of the long-term average of everything. The future growth rates also don't look as impressive as the past performance was. So in the past, they were seeing about a 40% earnings growth rate. They're only expected to grow by about 12% in the future. So, even analysts are not really expecting much more upside from here. So it just feels like the Bitcoin story is just a way to kind of gain some attention again, if you will.
I was trying to see other companies that were doing this Bitcoin play, because there are some companies that are keeping Bitcoin on the balance sheet, like aside from the miners that are listed. Sure. But they're not really trying to make it as a play for that. They're not trying to do that whole financial engineering thing that MSTR is doing, that we should be a proxy now for Bitcoin. And GameStop seems to be leaning in that direction, that they want to be seen in that sort of vein, which really makes me nervous. So anyways, that would be the play. You can play the options on that. I don't see why you wouldn't just buy the underlying Bitcoin or buy MSTR, but it'll be very interesting to see if GameStop takes off and it does rip for whatever reason, because structurally it does rip, to see what other companies jump into the game. Because I think it'll be like to me it'll be like a red herring of, hey, any company that's doing this, stay far away from. Just expect that their business is doing way worse than you think. Because why on earth would you do this? 0% coupon. All right. Next up, the market's been under this overhang, which you and I have been talking about now for weeks, and because Liberation Day, which is my favorite, I love when the government names a thing, and when the government names a thing is usually the thing that whatever the bill or whatever the project or whatever says on the tin, the opposite is actually what's happening. So this idea of Liberation Day, and what do you get for Liberation Day? Tariffs. More and more tariffs.
More
And
tariffs.
so,
This time targeted at the auto industry. I don't know if you saw. I mean, a big portion of that pullback was definitely in GM and Ford, seemingly taking some of the biggest hits. I had pulled up a chart here of some of the comparisons of some of the bigger automakers, and just looking at the last 5 days here. Well, let's look at the last like 3 months or so. You can kind of see most of these pulling back pretty sharply just today alone, as many of them were actually starting to gain some traction. So auto industry not looking good at this point. Even Tesla pulled back a bit today as well.
right. I always love that, Tesla's been had their bounce, but what all right, I'm not gonna get political. I just find it very funny when the oligarch who's standing next to the soon to be king, his stock is going up. Well, the industry is going down. Fine, whatever. What I find interesting here, so the tariffs are not just on the auto coming up for April 2nd and April 3rd. We have the auto tariffs, which are big, 25%. We have Venezuelan oil and gas, so 25% there. Canada and Mexico, 25%. Retaliatory tariffs to the EU. It could scale depending on what they're doing, because he wants to match their tariffs. So just like all over the place, agricultural products, just all over the place tariffs.
Yep.
But at the same time, he's saying, but if we make a deal, then maybe the tariffs don't go on, or maybe we take them off, or maybe it won't be as much. And so what is this, everyone? This is uncertainty. And uncertainty in markets is volatility. And so we're seeing that within the overhang, where a bunch of people are like, hey, look, let's just withdraw our money from the stock market. Just wait until the dust settles and see what happens, which ironically is exactly the type of catalyst that can actually start a massive drawdown.
A sell-off, for sure.
Yeah.
Yeah, I would say if you're looking for other areas to see some strength, at least my takeaway from this is that obviously stocks with exposure to other countries as far as their revenue are going to be hit a little bit harder, right? Any of the technology, materials, and energy sectors are of course going to be pretty vulnerable. Anything targeting aluminum, steel, that totally makes sense. The defensive stocks are probably going to outperform any of the retail cyclicals. But the one I found, kind of interesting that is worth taking a look at is just really kind of honing in on the software, cybersecurity, defense tech, the large cap financials, because the service industries are obviously going to be the least impacted by a lot of this volatility. So like one of the sector ETFs that I've been noticing looking pretty good in my portfolio is XLF, which is the finance or the financial sector ETF.
Well, that AI because we had the DeepSeek dip that happened, and then the AI stocks never really recovered after that, because we went right into the heels of this window of weakness from February 20th, where this drawdown. And one of the unfortunate casualties of this was CoreWeave. This is a stock that you brought up, which is this AI play, infrastructure AI play, and they IPO'd. And let me just pull up my chart here. They IPO'd and they were expecting like a way bigger start. They're here at $40 per share, but they're expecting way more than that. And it was sad sad for them, because they've been on this massive run in the private money space. I think they did like 700% increase in revenue over the last few years as they've been ramping up. And I'm not going to play it now, but the CEO was on the news talking about it, and it was like one of the saddest IPO CEOs I've ever seen, who was expecting this huge, I'm a hero for getting this deal done, and it gets done exactly at the wrong time. So that's pretty painful. But I wanted to bring up here the idea here. You mentioned at the top of the show the 200-day moving average. Now, I'm having difficulty understanding why so many people follow the 200-day moving average. I get as a general rule, like a general moving average, but many times, like, the price will crisscross around it. And I know specifically some people who will swear by the 200-day moving average. Am I missing something there, like versus the 50, the 100, the 300? Like, what's special about the 200?
Sure. Why 200 versus 252, for example? There's 252 trading days in a year. Why not incorporate the entire last year? I think a lot of this is just sort of an artifact of the technical analysis community from the 1980s and 90s that had 50, 100, and 200-day indicators that were usually added to their screen. A longer term average is considered a little bit more of a smooth average over a longer period of time. So it gives you a better indication of where price is over that period of time. Obviously there's more noise in a short-term indicator, but you're right. I think the reason that I keep an eye on it is because it is commonly used by many Wall Street analysts. It seems to be a common rubric. So it seems to make sense to pay attention to if we're all paying attention to it.
Well, because what you since you put me on VWAP, and I know I keep singing your praises for this, but it completely changed my trading. So over here, we had this VWAP level, this previous VWAP level, that the price just literally retraced from one VWAP to the next one. But we had missed, we didn't mitigate these two levels from below. And so my expectation is always that if we were going to turn down, that we had to head towards these two levels before we could even call the end of this this correction phase. So my question now is that, one, we closed at the lows of the day. So it's 422. We closed at the lows of the day. Generally speaking, I didn't run the numbers on this, but generally speaking, if the stock market closes on the lows of the day, the selling is not done. And we're going to start the next business day with more selling. But the next level that I have here is at 52.75. Are you seeing anything fib-wise or anything like that, Elliott Wave-wise, that would suggest that we have more selling to do all the way down to that level? Or is that just too much to ask for?
I mean, honestly, if we look at my screen here for a second, there's a couple of differences here. You've got a little bit higher of a close against the 200-day moving average because you're looking at the S&P 500 futures. Right. The price is slightly different on the SPX index or even the SPY ETF. And that 200-day moving average, we actually ended up with a tiny little doji that was a close above the 200 before we actually pulled back. So really, just looking at this chart, this is obviously a pullback against the 200-day moving average, which was sort of my short-term expectation, is that we would test that level and then could potentially pull back against it. And that's what ended up happening. What I find interesting, though, is that if I'm looking at the fib retrace over this longer period of time from August of 2024, we actually barely touched the 0618 level, which is where I would expect a retrace to kind of end. We got some confirmation to the upside, and we still have ultimately posted a higher low. So if we find support from here, this could still ultimately be the support zone that I think people are hoping for. As we move into the April 2nd deadline here, and I know we're going to cover this in a moment, Tom Lee's got some thoughts on how this could still be a rally point. I think there's still room to support the idea that this is a good opportunity to start buying into this zone, and we may not see continued downside from here.
Interesting. Okay. Yeah. Good queuing up. Let me just pull that up for Tom Lee. Now, I don't follow Tom Lee as religiously as some other people do, but I do find that he gets to articulate, at least in this case, the bull case, in a way that's fair to the thesis. So let me just pull that up here.
The final hour of today, BlackRock's Rick Reeder saying last hour that the animal spirits that helped drive the market higher.
Seems like it's moved to slower growth for a couple of quarters.
Let's just move forward.
So that was interesting to me, Tom Lee, as I bring you into this conversation, the head of research at Fundstrat and a CNBC contributor, because he's talking about animals in hibernation, not animals dying. It goes back to this idea of uncertainty around things like trade and tariff policy.
I would just like to make this comment that this whole Alan Greenspan animal spirits thing that's been around since the 90s, I'm so over with.
We need
when
a
he
new
first started in
analogy.
the markets. Sorry?
We need a new analogy.
Yeah, because it's not
Yeah.
even very specific. You get into the
Right.
markets, it's like, what are you talking about animal spirits? And you got to go learn about the .com bubble before you even understand what's going on. Whatever. And they're really belaboring the point here.
And the fact that as of right now, in the midst of that uncertainty, perhaps companies are sitting on their hands before they start to make any kind of future investments. So if that's the situation, how much does getting some sort of certainty now frame the investment thesis for how you position yourself moving forward?
I think that's exactly what's happening now, Morgan. First, in 2018, which Michael was talking about, the spike in the VIX or the collapse in investor sentiment or consumer confidence, that all happened around February 2018. So really that coincided with that first low that was made in 2018, and the market began to stage its recovery. I don't blame any business or investor for saying, look, there's so much uncertainty, I can't make a decision. I think that's why Rick Reeder's talking about animals in hibernation. But as we start to think about the second half of this year, first of all, we've already had the collapse in sentiment. We've seen $850 billion of cash raised over the past year on money market balances. And then in the second half, we're looking for possibly tax reform, which really propelled stocks in 2017. So I think that the odds of a V-shaped recovery in stocks that come after April 2 is just extremely high because we've already.
So this is something that we've talked about multiple times, that we don't really, it's not very easy for us to get these 5-year, 10-year bear markets. That oftentimes sharp drops within the market are responded to with sharp rises because of how dealer positioning and gamma. And so he's making the case here that after this uncertainty of the tariffs thing is gone, April 2nd, April 3rd, well, there's no real reason why we might not rocket back up with a V-shaped recovery because all the negative sentiment has been priced in.
Right. Yep, I agree.
So let's see what he says here. Finish it off.
Already sequenced a lot of the panic that people saw in 2018. I think it's already taken place.
So what would you be buying right now?
Well, to us, I think Exhibit A for a V-shaped recovery is going to be Tesla because it's really been one of the most controversial stocks, and it's been caught in that sort of political maelstrom of Doge and Elon Musk's involvement in the White House. And I think it's already recovered more than 15%. But I think if Tesla is leading us into this bounce, that's a bull case for Mag 7 to be the group to own in the next few months.
So you like Mag?
Yeah, so that Mag 7 bet, I actually really like. I was taking a look at the options for that, and on XLK, actually, you get the same sort of payout on the Qs, but on XLK, the 240 call for June 20. June 2025. Again, I think we peak in June, July, and we roll over. But getting the option in July is a little bit too expensive, and I'd rather get it before the FOMC meeting in the summer. So June, that has a return profile of anywhere between 2 and 10x for the calls, which is pretty good. So you get this exposure to the tech, to the Mag 7, without actually placing your full capital on the stocks themselves, because you never know when the recession will start, what kind of volatility will be there, blah blah blah. You get exposure to the upside with this asymmetrical play. So if you actually think you can do 5x on that, 10x on that, well then you only need to put on 1/5 of your position, which would be your stop, right? The premium is that would have been my stop anyway if I was going to buy the underlying.
Right.
So I find that interesting. Kem was so right. I was pulling up this video from let me just play it real quick because I never get tired of how right he is. This is a month ago. Okay, a month ago, Kem Carson was talking about this, where from February 20th, we have the sell-off. Let me just jump to it here.
Back to kind of the vol and the timing and stuff. How long this window of weakness? How deep? And is this a process you see as being a gradual?
So this is like February 20th or whatever, February 19th, February 20th, I believe.
One, or are we in like crash risk?
So right now, to be very clear, this is the beginning of a window of weakness and a correction. I do not see this as a current 20% decline. Okay. We've been very clear. We highlighted this many months ago that starting in around February options expiration, we would get 10 to 12% decline. Right? I still think that's the case. It's very orchestrated, controlled. Entities were prepared for it. Again, we talked about all the people. The communication's been clear. The administration's been pretty clear. Here it comes. But just as clear will be a response with QE, right? On the other side, monetary-driven policy.
You think that's what, Q3? When does that happen?
No, that happens sooner.
Yeah?
That happens sooner.
Okay.
I believe that happens probably in the next 3 months.
Do you still think this year we get 6% 10-year, or are these things going to actually work to some effect to bring that down?
Well, you know, last year, if you remember, we called for 5, and we got it about
Okay, and then he talks about how bonds are going to go to 5%. So
interesting, he's wearing an AWS jacket. I wonder, is that some product placement? What's going on here?
Exactly. Stylish too, Jesus.
Yeah.
But that's like how everyone now is wearing, not everyone, but a bunch of people, especially my son's generation, have the 70s mustache. It's all back now. It's all the rage. I was like, what are we doing? I thought we decided this was terrible. Anyways,
the tinted glasses are coming back too. I thought about getting a pair of my own.
Okay, that I might actually do. So he talks about here that the path he was sort of laying out is that we get this drawdown in February, and then the drawdown causes some sort of response, either fiscally or monetarily, which then leads to this V up. Here's the little pinch we don't have over here. This drawdown didn't happen enough before the Fed meeting in March to warrant any move from the Fed. And so if that's the case for why we should then bounce back up, if that's crucial to it, we didn't get that. So I wonder if then there's more downside that needs to happen so that the Fed has to come out and, you know, jawbone the markets back up, promising the more liquidity, and then we get to move up. So we didn't get that yet. So to me, this weekend is like the crucial weekend to see what actually happened, what we can expect to see on Monday or Tuesday, once the selling is done. Because Bitcoin will tell us if the selling is going to continue into Monday. I mean, generally speaking, it does continue into Monday, and then futures on Sunday will open up, and we'll get a better idea of what's going on in the overnight. So until we get to next Tuesday, I don't think we're in the all clear. And I don't see why we couldn't get a sudden 4 or 5% down in the S&P and NASDAQ. Just drop. It really washes all the worry out, and then we move up to the right. But I know last week you were talking about that your window for potential bottoming in the market is still like for like the few weeks into April, like the whole month of April. What was your window, your time frame on that?
Yeah, I think we had discussed that being about April into May, and we could pull back as far as, you know, roughly the 520 to 540 line on SPY, or 5200 to 5400.
Yeah, so
it still seems probable, but it depends. This next week could spell a very different picture.
That's right. So that's why I think it's crucial for what happens. I'm going to be paying attention to Bitcoin all weekend, and I'll let me know. Now, speaking of Bitcoin, I've just been having so much fun with Bitcoin, because the last few calls that I've made on it has been just absolutely nailing it to exactly the levels that VWAP shows, which makes me wonder why more people aren't talking about the VWAP levels, but whatever, because it hit exactly those things. And I have a small suspicion that the sell-off is not done in Bitcoin, and that we're going to get I wouldn't be surprised at all if this weekend or by Monday, Bitcoin didn't actually drop to 74,000. It's 10% down more. I get it, but the levels are calling it. Let me just pull up my chart over here.
I could see it, and it would still be support with the current range that we're in.
That's right. It would still be support. So let me just share it here real quick. Okay. So we have over here. Okay, so let's just hide these trend lines and okay. So this level over here, this VWAP level, is still hanging out at 74. And for me, the only thing that can invalidate this level as invalidate this level is if this yearly moving average actually crosses above that level. I've made the case before that if you actually take a look at the yearly moving average for Bitcoin, as long as Bitcoin is in an uptrend, we're always above that level. So that's this red one over here. So we break above, and then we always stay above as long as we are in the bull trend, and then it breaks below when we're headed into the bearish territory. So this is the level, and we break below. And actually, if you go back on the longer Bitcoin chart, it always happens. You'll see that that's always the case. That as long as it stays above that level, we're bullish, and we're below it, it's bearish. And so for me, until here on this chart, it's just starting to cross. Depends which Bitcoin chart you're looking at. Just starting to cross. If this finishes this weekend, then I say that the lows are in, that this was the low for Bitcoin, that we're running up. And if we don't, I think we do revisit that level. So that's what I think will actually happen. Let's just refresh this. But even if we don't get all the way down there, I think we still get to 82.4 this weekend, with a possible somewhere down here to 76, like some trip down. But I think we broke this bear flag, and that we should at least cross down to collect this this daily VWAP, which is at 76. That's what I think happens. Do you see 76?
Okay.
Please tell me you see 76.
Yeah, between 74 and 76. I think either one is possible, but the 76 is largely just because that's where the most recent wick found support. But 74 was the last breakout period that started this new range for me, 74.250. So I think anywhere in that range seems plausible to me.
Right. I remember at the top over there where you were the basically the last red mark at the top. I remember you were telling me that, hey, we could head back down over here, and I was like, oh wow, that's I thought that was a pretty bold call that you were saying back then, and look at that, it came right back down to that level.
Bitcoin loves to range, that's for sure, and that's been consistent with every chart I've looked at for 8 or 9 years now on Bitcoin.
Right.
It's a very technical asset. So there's some expectation that we retrace and confirm ranges of price. And that's definitely what's happening here. But even just from a Fibonacci measurement perspective, if we're just going here to here, it retraced by about 50%. I still think we could go a little bit lower, but I think that seems unlikely, just given that I put a lot more weight and emphasis on support and resistance than Fibonacci.
I understand. Actually, I should pay more attention to Fibonacci. You bring that up more and more, and I'm like, okay, is this another VWAP thing that I should pay attention to?
Maybe.
Well, the last thing I want to say on this guy here is just to bring up the your liquidity indicator here, the M2 global liquidity supply, and I've been making the case for the offset that you need for that to be 78 days, because, and I don't think it's coincidental that this run up in liquidity with the 70-day offset happens right at April.
Happens to coincide with April 2. Yeah. Interesting.
Exactly. And I didn't set it up that way. That just happens to be the case.
Yeah.
And this low over here, which is exactly like the low that we're experiencing right now. So this low over here. In liquidity, it's a lower low. This was a lower low than the previous one that we had at this drop over here.
Yep.
So it doesn't mean for sure that this gets lower still, but I find it hard to believe that's not going to be the case if this is a bear flag. And I don't know if you've been seeing people everywhere online talking about like this bear flag going, is it too obvious? It's too obvious of a bear flag, so it probably won't
don't trust
play
it.
out. Yeah,
Sure.
I was arguing with some today about that. I go, the bear flag gets painted because people think that. Do you not understand that? It gets painted that way because people go, no, it can't be. This is not really going to be the case, and then it reverses down, and they go, oh, that's why. How else do you think the bear flag gets up to where it needs to be? Anyways, I digress. People talk about patterns in the charts, the shapes, and they don't understand that we're the ones doing it. Like we're making the pattern.
It is a form of a self-fulfilling prophecy. Sure, we're all participating in the same analysis. It's just like our question around the 200-day moving average. If everybody's looking at the same, it ends up being a potential reason that you make decisions around. And enough people do it, then it becomes a self-fulfilling prophecy.
That's right. All right. Well, before we leave, I'd just like to do a quick shout out to our sponsor, TradersPost. TradersPost is an automated trading platform designed to take the friction out of executing your strategies. Whether you're trading stocks, futures, or crypto, TradersPost connects seamlessly to your broker or exchange, giving you the flexibility to automate your trades without missing a beat. If you're tired of being the bottleneck in your own success, it's time to let automation do the heavy lifting. Head over to traderspost.io and see how easy it is to streamline your trading. TradersPost, because your strategy deserves to run at full speed. Well, it's been a nice week. Let's hope the world survives tariffs. We'll see how that goes. I got to say, things have shaken up here in Canada. People are talking a lot about, hey, maybe we should develop our own resources and do more businesses and buy local. I go, we could have always done that. Why weren't we talking about that before?
Sure.
Sort of making the case for Trump doing what he's doing, that we can also focus on our own things, but whatever. We'll see how that goes. And if Bitcoin hits 74, I'm going to be so happy. You know why? Because I did a poly market bet that is going to hit 74 this weekend because it only costs 3 cents. And you know how I love those long shots.
I do. Little lottery tickets here and there, Tom, they all add up.
That's right. Sometimes in the negative, as my wife likes to remind me. Sometimes
well, who's counting wins and losses? They're lottery tickets, right?
Excellent. All right, so we'll be back next Friday with more after hours. We'll see how the market goes. Please remember that we're going to be here on Tuesday for office hours, talking about TradersPost and how to create automated trading strategies and run them with our platform, as well as on Thursday for Blueprint, where we go over tips and tricks about how you can automate your strategy. The last one we did was a pair trading bot, which I'm still beefing up and enhancing, and I'm looking forward to publishing it for everybody. But until then, we both wish you a happy weekend. Happy Liberation Day.
Cheers, everyone.